Well, joining us now live from New York with more on the impact to global markets is Africa 54 business correspondent Jill Malandrino. Jill, welcome. Now, did Britain just blow up Europe? Can you give us some clarity on what all this means now?
It's been a long 24 hours for us market correspondents. Brexit certainly shocked the global stock, bond, and currency markets. The Leave vote puts the UK on track to end its 43-year membership in the EU, and now political leaders are scrambling to make the next move. The most obvious reaction was an 8% move in the pound, plunging to its lowest level since 1985. We also saw broad declines in the metals and energy sectors, but the financials were hit hard the most, especially the European banks like Deutsche Bank, Credit Suisse, UBS, and Barclays. Gold, which is viewed as a safe haven asset, surged more than 5%.
Now, Jill, is it all doom and gloom for the financial markets, though?
Let's put this into perspective a bit, because the initial move is always an overreaction. The Dow was up 500 points in the last 5 days and was down roughly the same amount in the pre-market. So basically, we are where we were just last Thursday. A 500-point move in the Dow in just 5 days is tremendous. S&P 500 futures touched an overnight low of 1999, down from the overnight high of 2119. Prior to the Brexit vote, the S&P 500 just yesterday was just under 2% away from making new all-time highs. So while the overnight moves seem really exaggerated, you have to take into consideration the levels we are coming in from. In fact, I think there are some excellent buying opportunities out there now.
So what happens now?
Prime Minister Cameron has to notify the European Council. Next is a 2-year negotiating process to work out the details of the exit, but I suspect that it will go on much longer than that. Recall that the UK has its own currency and central bank and essentially has been operating on its own for years anyway.
Now, should investors be concerned about their money?
I would expect the heavy selling pressure to ease early next week, assuming nothing out of the ordinary occurs over the weekend. Foreign uncertainty could even potentially send investors to U.S. markets. I want to urge investors not to panic. This is not remotely close to 1987, as some in the media have suggested. Not to sound like a broken record, but the one thing markets do not like is uncertainty. And there's a lot of unknowns out there now, so it will take a lot of time and it will take a lot of patience for this to play out. For retail investors, don't let isolated events dictate your investment style, but rather focus on the long-term averages. Look at it this way. The S&P 500 is up almost 300% since the lows of the financial crisis. That's a move I would not want to miss out on.
Well, Jill, thank you very much for your analysis.
Thank you.